fractional reserve. So it's pretty commonly known now that the money is relent over and over again. If all depositors of all the banks turned up at the same time, there wouldn't be enough cash to pay them out. Such a situation is highly unlikely. Every borrower repays his loans and pays interest on it. In principle, the difference between a loan and a deposit interest rate is a source of the bank's profit. Naturally, banks have to account for some creditors that will default and reflect it in the lending interest rate, or all the creditors who repay cover the costs of defaults. On top of it, the bank possess their own capital to provide security. Fundamental to this deposit creation principle is the percentage of deposits that a bank lends out. The description of 100% loan to deposit ratio is often used, meaning that all deposits are lent out. In traditional banking, this ratio was always below 100%. For example, years ago, Westminster Bank, before it became National Westminster, intended to lend out 86.5% of every deposit. So for every £100 deposited, the bank would lend out £86.50. The remaining £13.50 was retained in the bank's reserve, with a small portion of that kept in the Bank of England itself. In practice, this ratio was the bank's control tool on the deposit creation process, ensuring that the amount of money supplied to the market was limited. According to this principle, for every £1 deposited, a bank lends out 86.5 pence. After only 5 cycles, the amount is reduced to below 50 pence, and after 32 cycles, it is below 1 penny. It's forever decreasing. If the process continued forever, the total amount of money lent out of £1 would be less than £6.41. Go calculate that. If you've been tempted to rave about the effects of, fractional reserve, because I think we all have. I've always said it's not the issue. It is an issue, but it's a manageable one. And I'll show you why. So let's take into account that last bit. If the process continued forever of lending money out in that repeating cycle of fractional reserve lending, the total amount of money loaned out on £1 would be less than £6.41. With every cycle of deposit creation, a bank built up its reserves, ultimately collecting almost entirely £1 for every £1 initial deposit. It's arithmetic, and it works. Added to capital repayments, interest payment on loans, and the bank's own capital base, this system ensured that there was always enough money in the bank for every depositor. For years, banks worked as a confidence trick. The notional value of deposits and liabilities to be paid by the bank exceed the value of the money on the market. And since only a very small number of depositors demand cash withdrawals at the same time, and almost all these paid out deposits are deposited in a bank again quickly, the banks ensured that every depositor got his money while circulating money in the economy and stimulating growth. The loan-to-deposit ratio was a self-regulating tool. And speaking more esoterically, don't lose sight of the fact that money is a global form of the exchange of not only goods, services and money, but our very energy, our labour, the things we do, our very existence. We all hear great tales of people who live without money, but they're always under different circumstances to those that most of us face. So although it's inspiring, let's keep some reality going, because in terms of the counterintelligence movement, their main purpose is to move what's happening into some kind of fantasy-filled realm where nobody quite clearly sees what's going on anyway. So if you feel that way, step back a little bit and look at the reality and don't be overwhelmed as to what we can do. Because I've always said there is something we must do, and it will become readily apparent the more and more eye-witter people are seeing. Going back to this system, as with every cycle, it multiplies. The reduction of amounts created decreases exponentially and quickly. The faster the deposit creation cycle occurs, the faster the reduction progresses. So the total created from the original £1 deposit in a bank is a finite, not more than £6.41, assuming the 86.5% loan to deposit ratio, backed by nearly £1 in reserve. It's an inverted pyramid scheme starting from a fixed initial deposit base and quickly reducing through the deposit creation cycle to zero. Now, that's kind of a wealth creation system that reduces itself to zero. I'm not trying to be scientific here. It's kind of conceptual, and it's there to see. And note also that it's a pyramid system, the ideal system that we should have and did have at some point before it was hijacked by a bunch of criminals, is an inverted pyramid. It's a control mechanism. The deposit creation process is at the heart of the banking system, servicing the public and stimulating economic growth. In theory, at least. Let's not debate the other stuff I could go into. The modern banking instruments of securitization, hedging, leveraging, derivatives, and so on turned this process on its head. Literally, the pyramid became, it fell over. It's no longer inverted. It is the pyramid you see on your dollar bill and everywhere else nowadays. According to Morgan Stanley research in 2007, UK's loan-to-deposit ratio, UK banks, was 137%. In other words, the banks were lending out on average £137 for every £100 paid in as a deposit. Another conservative estimate shows this indicator for major UK banks was at least 174%. For others like Northern Rock, where I worked, it was a massive 322%. Banks were borrowing on the international markets and lending money they didn't have, but assumed they would have in the future. Likewise, international markets were doing exactly the same. At first sight, it might not seem so much different than deposit creation. Deposit creation is lending money by the banks that they don't have, on the assumption that they will get enough back in sufficient time in the future from borrowers. But if you look closer, there's a remarkable difference. With every cycle of the 86.5% loan-to-deposit ratio, every £1 deposited is reduced, becoming less than 50 pence after 5 cycles, etc. With a loan-to-deposit ratio of 137%, so £137 for every £100, not to mention 174 or even 322, the story is drastically the opposite. Imagine a banker gets the first £1 deposit in the first week of a new year and lends it out. Imagine that twice every week in that year the amount lent out comes back to him as a deposit, and he sustains such deposit creation process with a ratio of 137%, twice every week for the year. This is a perfectly plausible scenario on the current electronic financial markets. By the following New Year's Eve, the final amount he lends out from the original £1 is over £165 trillion, trillion with a T, which incidentally is over 16 times the amount the governments have so far injected into the economy. So the total amount lent out in a year by a banker is over £447 trillion. Significantly, with a loan-to-deposit ratio 100% or above, no reserve is created. It's actually depleted. The banks have been depleting their reserves. This is where the gold is being sucked into and ferried who knows where. Some rich Nazi global empire, or, I don't know, you go figure. It's an acknowledged monetary principle that the lending interest rate cannot be below zero. This would allow borrowers to borrow money, and banks would be, well, they'd have to keep paying them for doing that. So there'd be no incentive to lend, and borrowing would have become a source of income for a borrower. Ultimately, lending would have stopped completely. It's a very similar principle that the loan-to-deposit ratio cannot be 100% or above, as in such circumstances, an amount of money coming from economic activities into deposit creation cycles would be multiplied very rapidly to infinity. Economic growth and inflation would not be able to catch up with it, which happens if loan-to-deposit ratio is below 100%. So, it is not fractional reserve that's the issue, it's the loan-to-deposit ratio, which below 100% traditionally served as a very strict regulating mechanism on money supply, stimulating the economy, becomes a killer above 100%. Literally a killer, an intentional one. The banking system becomes a classic example of a massive pyramid scheme. But as with every pyramid scheme, as long as the people in institutions are happy not to demand cash withdrawals from the banks, it's sustainable. Any bank can print an impressive account statement or issue a new deposit certificate. The problem is always whether the cash is there. The qualitative and quantitative difference between the loan-to-deposit ratio of 0% and 99% is infinitely smaller than between 99% and 100%, or 101%. With ratios between 0 and 99%, we always end up with a money-making machine that creates a finite amount of money out of the initial deposit, with a reserve nearly equal to the original deposit. If a ratio climbs to 100 or above, the amount of money created spirals rapidly and exponentially to infinity. If above 100%, there's exponential speed and no reserve is generated in this process. Indeed, the opposite is what happens. It's little wonder that Northern Rock, which used the ratio of not less than 322%, collapsed well ahead of the others. HBOS, with a ratio of around 175%, ended up in a meltdown later, and HSBC, that used no more than 91%, was relatively safe. Being part of the global banking system, however, it had been at risk stemming from the actions of other banks, and, well, it changed too, didn't it? So, there you go. That's kind of my perspective on what the real problem is. Don't get too caught up in fractional reserve. Because if you can imagine, just to put dead simply, that tomorrow we, the people, took over our nation, removed the criminal gang that's running it, which is just going to come someday anyway, isn't it? History either suppresses or allows these things out of the bottle, and it's going to happen. But don't be distracted, because tomorrow we could have a system whereby we could actually ride out of this. We really could. The fact that Adolf Hitler arguably used these abilities, these financial abilities, to generate wealth, it doesn't mean that he or anything related to him was in any way good or whatever. I mean, the whole story kind of stands for itself. So you've got to try and keep left and right wing politics out of this altogether. And on that point, I'll just refer back to the swastika being the perfect mathematical symbol, one of many. You can think of others. In fact, it's a good thing to do because you'll recognize those too. Somewhere deep in history, things summing to zero not only is very important religiously, scientifically, whatever, to them, but it also has a deep resonance that they all actually say does work with the soul and the spirit at a deep level. So are we supposed to not believe this? I'm suggesting the reason for that is subconsciously you are detecting that it's a sums to zero thing. There you go. I don't know. Is that all heavy shit? Maybe I'm just a fool. So's this song. This is Gaylan Dorsey, The Fool.